Hello, everyone, and welcome to today's webinar, Breaking Away Live. You ask, advisors answer. When it comes to leaving a wirehouse, every advisor's story is unique. Yet the decision to break away often raises the same questions. What challenges will I face? What options are truly available? And what does success look like on the other side? Lewis Diamond is moderating this exclusive live panel featuring 4 advisors who made the leap, from wirehouse world to independence. In this candid Q&A driven conversation, you'll hear firsthand accounts from advisors representing each of the 4 major wirehouses: Merrill Lynch, UBS, Wells Fargo, and Morgan Stanley, who chose different paths to independence, but ultimately all achieved incredible success. Our panelists will share their personal journeys, insights, and lessons learned as they transitioned into the independent space. We'll hear from Trent Leyda, formerly with Morgan Stanley, now leading SpirePoint Private Client and RIA custodying assets with Tru and Goldman. Jordan Ranishevsky broke away from Wells Fargo, now leading independent firm Carnegie Private Wealth built on the LPL SWS platform. Rebecca Baker, who left UBS to build independent firm Marble Wealth, and Jerry Davidsey, a Merrill Lynch breakaway who launched his own RIA, Persilium Private Wealth, with support from Dynasty Financial Partners. This session is designed to maximize interactivity with your chance to get an honest look at how each advisor navigated the transition process, the key differences in moving to platforms like LPL, Sanctuary, and standalone independent RIAs, the challenges and freedoms that come with breaking away, and other topics and questions that you, the audience, ask in this unique live roundtable. Whether you're actively considering independence or just exploring the possibilities, this conversation will provide invaluable perspective on what it takes to successfully chart your own path. This is your opportunity to ask questions, either of a specific advisor or for the panel anonymously. Just click the Q&A icon at the bottom of your screen, and we will get it into the queue. And now, to kick us off, here's Lewis Diamond.
Thanks, Pat. And thank you all for investing time with us today. We've been really excited about this. Many of you know we host a weekly podcast. I think all 4 panelists have been gracious enough to join us on that podcast. But one of the big gaps that we've had is advisors can't ask the questions that are on their mind. They're really questions that I come up with or someone on our team comes up with. So today's that chance. Under strict confidentiality, we promise you your name is anonymous. Fire away. If we don't have time to get to your questions, we'll be sure to follow up offline. But I think this is an important one. We really designed the session because breaking away, transitioning from a firm is probably the biggest business decision that an advisor can make in their career, probably on par with selling their practice at day's end. The question of whether to leave the wirehouse world and build something on your own, it's exciting, it's daunting, it's overwhelming, it's a whole complex cube of emotions that every advisor navigates. Because it's not just a career move, it's a decision to fundamentally change how you serve clients, grow your business, and build long-term equity. What makes today especially valuable is it's not you hearing directly from consultants or recruiters or folks with a hidden agenda. This is hearing directly from your peers, advisors who walked in many of your own shoes, coming from each of the 4 major wirehouses. And each of them were very successful to begin with, and all have really catalyzed their growth and accomplished probably far greater things than they ever thought they could as independent business owners. Their stories are honest, they're unfiltered. You'll hear the good, the hard, and everything in between, and maybe some surprises based upon your questions. Basically, the goal is just that by the end of this session, that you'll walk away with a much clearer picture of what's possible and how to think strategically about your next chapter. So I'll stop talking. You can sign on to listen to me. Let's just go through the panel, and if you can just briefly introduce yourself, your name, your former wirehouse, what your current firm looks like, and then anything you can share about your business, AUM, team size, types of clients, just anything to give the audience some perspective on what you've built. I'll go in the order that I see on my screen. Let's start with Jordan, and then Rebecca, and then Trent, and then Jerry.
Sure, thanks. So I'm Jordan Ranishevsky. I'm the senior managing partner of Carnegie Private Wealth. We are affiliated with LPL and their strategic wealth platform. I was a Wells Fargo advisors employee for 20 years. So we were there a long time. A couple of my partners were there 30 years. So we broke away at the beginning of 2023. So March 1st of 2023, we moved over. Our firm right now, we have a little over $2 billion in assets. We have our 25th team member starts on Monday. We manage, it's about 1,200 clients kind of overall, in terms of just kind of overall client makeup. And, we're really focused on, trying to develop the next generation. So we've hired a lot of younger team members and are continuing to grow that out. And that's a big focus for us. So that's a little bit about us.
Thanks, Jordan. Rebecca, how about you?
Thanks. I am Rebecca Baker. I'm the COO for our firm, Marble Wealth. We are in Montgomery, Alabama. I've got two partners, Matthew Murphy and Adam Rogers. We left UBS in August of 2022, so we just celebrated 3 years. We are right at or right over $1 billion in assets under management. There are currently 5 of us right now. Our 6th is coming on in November when we are opening a Birmingham office. So that's exciting. We mainly work with a lot of families. We have about, I'd say, 250 households. Some of those are multi-generational, some are not. We also work with a lot of business owners. That's just kind of where we morph to. Some of those have sold businesses, some of those have not, some of those are going through that process. So, we have the typical retirees and those that are growing their wealth as young professionals, but then we add the business owners too. That's kind of something we specialize in.
Thanks, Rebecca. Trent, how about you?
Hey, thanks, Lewis. Trent Leyda. I'm the CEO of SpirePoint Private Client. I started the firm. I quit my employment at Morgan Stanley in October of 23. Here we are in October of 25. Five of us quit to start the firm. Now there's 11 of us. I'm in Vero Beach, Florida. We just opened our second office in Palm Beach Gardens. We manage about $1.5 billion with 200 households, and we're looking to, we really work, with a limited group. I think we focused on sort of family wealth, mostly family wealth office, back family wealth office, and we're looking to grow our business in a smart, productive way as we move forward. And thanks for having me here.
Thanks, Trent. Jerry, bring up the rear.
Hi, everyone. I'm Jerry Davidsey. I'm the CEO of Priscillium Private Wealth. We founded Priscillium with 3 other partners in April 2022. And after leaving Merrill Lynch, we were really focused on delivering an exceptional client experience and have more than doubled our households and assets under management over the past 3.5 years.
Short and sweet. Love it, Jerry. Thank you. And congrats, honestly, to all of you. I mean, all of you have grown, I think, well beyond where you were at your prior firms, and that's with the transition, et cetera. So keeping true to the theme today. I had a couple of questions I was going to ask you, but we already have our first audience question. So maybe whoever just answers first, you can take this one, and if anyone wants to layer on top, please go ahead. The first question is, can you please share the main hurdles you were not expecting?
I'll go first, Lewis, although it may not be the answer they're looking for. We worked with Dynasty Financial Partners up until our launch in April 2022, and we felt totally prepared. They walked us through a 350-point checklist where, from their experience and the other 50 firms they had launched before us, we really covered everything from marketing to branding to setup and custodian, and felt extremely well prepared on day one. And I think our results over the first few weeks were a reflection of that.
Very positive. And anyone else? Rebecca, Jordan, or Trent?
Yeah,
I would-
I'd say, oh, sorry, go ahead, Rebecca.
No, you go ahead, Jordan, you're good.
I was just gonna say, I think for me, the obstacle is always time. I think we felt very prepared going into it, and I could not say enough about the help we got from LPL and Strategic Wealth as we prepared. But at the end of the day, there's a lot that you can't prepare for because it just sort of happens on the fly, and I think that you're always limited by that time factor. And so I think that was probably our biggest struggle over the first several months, at least, was just, how do you prioritize, how do you fit everything into the day that you need to and still be able to, see your family some and stuff like that. So I think that was probably the thing that was a struggle for us.
Yeah. Rebecca, how about you?
I mean, I would agree. I think, again, like Jerry said, I don't know that this is the answer that they're looking for, but as we were talking earlier, everything is, so you do have to be organized. You do have to plan. You do have to have a great transition team working with you to do all that. But I think the surprise was more, like Jordan said, the time and trying to, I mean, you're bouncing from A to B to C to F to Z, and you don't have any control over it. But I think all of us said, we were the hurdle, what we thought was going to be the hurdle, which obviously is moving clients, because if you don't move your clients, you don't have a business. I think that was less of a hurdle than we all thought, which again is not really answering that question, but it's more of a, I think what I thought my hurdles were initially were not necessarily hurdles.
Yep.
Yep.
Great points.
I think.
All right, next question, another one from the audience. What ultimately motivated each of you to leave your firms? Let's start with Jerry, and then we'll do Trent, Rebecca, and Jordan, kind of go in reverse order.
Yeah, I feel like we were relatively happy at Merrill, but we knew we could deliver a much better client experience if we had more control at our own RIA. We especially wanted to be able to do more email and video communication. And we just weren't able to do that at Merrill, and still can't today. So that's the main thing for us.
Thanks for sharing that.
I too was happy with Morgan Stanley. There's a lot of things I liked about them. I think the theme is going to be across all of us is, better client experience, the ability to interact with your clients better, get them what they want, not necessarily everything at one firm, the ability to kind of go out into the market and get them what they're looking for. I think that, wasn't any one thing, it's always a group of things. It was, just kind of time, and our clients were actually surprisingly ready and like, why didn't you do this sooner? It was kind of the shocking theme, where are we going? What are we doing? And the positive impact of that was, very humbling at a interesting time.
Rebecca, how about you?
I agree. I mean, I think that's being able to put resources in place that you selected, whether it be a tech stack or whatever it is that or is the best thing for your clients. Like, all four of us probably have different ways of doing things, and none's right and none's wrong, but and our client bases may look different, but knowing what our clients need and being able to provide those specific resources has been amazing. I mean, we didn't have any problems at UBS. We had tools, but I think being able to select the specific tools for our business and our clients is something that, I mean, that just, it makes it makes your business so much better. It makes you be able to serve their clients so much better.
Well said. Jordan, how about you? Anything else to share?
So I would echo everything everybody else said because client experience is always number one for us, but I don't want to repeat what they said. So I just sign off on all that. I'll focus more on the team side and focus on the fact that I didn't feel like we could develop talent where we were. I felt like the structure was very confining in terms of just the way that hiring had to work, the job responsibilities people could have, their titles, their like all of those things. It just like it wasn't built for that. And so we just kind of got to a point where we realized like what we wanted to create wasn't possible to in the environment that we were. And we had to have more freedom and flexibility to actually create what we had envisioned in our mind.
And Jordan, follow-up question for you. So you were at Wells as an employee. I assume you probably could have gone independent internally with FiNet, which seems to be a pretty popular move for advisors within Wells. It's a kind of an option that none of the other wirehouses offer, at least right now. How do you reconcile the easy move of moving within Wells versus tearing off the Band-Aid and leaving altogether?
Yeah, I mean, we looked at that first. That was like the first thing we considered. I think as we got further into the process, though, we realized that a lot of the things that the rest of the panel brought up, we wouldn't actually be able to do there. I mean, we wouldn't be able to have full control over our tech stack. We weren't going to be able to recruit from within Wells, which was our most natural recruiting ground. And so if you go over to FiNet, then you can't pull other people over with you. And so that was going to be a constraint. And so, you know, we started looking at it. And then I think as we kind of started to open up and think about other options, we realized how much support was out there from other, you know, other providers. Specifically, like I said, we went down the track with LPL and Strategic Wealth, and you know, they helped us build out our brand, they helped us build out our office, they helped us to choose our tech stack and all of that, all the stuff that goes along with launching a business. And we were going to have to do all that on our own if we had slid over to FiNet. And so there was just a lot of things that we weren't going to, it would have been harder for us to create what we were imagining to go that route. And so we just ultimately, it was better for us to make a full break.
Yeah, I think it's great wisdom because I mean, I guess it all depends upon your goals, right? For some, it's just if we can have better tax status and owner equity and a higher payout, that's most important. But it sounds like there were things that you had on the vision board, kind of the
Yeah,
goals you're looking to accomplish, and you just felt like maybe you could have gotten some of the way there internally. But if we're going to go through the hard work of starting a business, let's go for it.
I think that's right.
Excellent. We got a couple questions on the legal side. I know it's a bit of a thorny issue, so feel free to plead the fifth if you'd like. But did any of you face any sort of legal challenges when it came to transitioning, resigning, etc.? Anything you could share on that?
Follow the rules.
Yes.
I mean, you know, as long as you're doing what you know you're supposed to be doing, you know, either taking information that is only you're allowed to, or if you can't take any information, not taking information. I don't think there's anything really to worry about as long as you are doing exactly what you're supposed to be doing.
I'll add to that. I think, you know, definitely consult with an attorney ahead of time. Follow the rules to a T. Don't do anything you shouldn't do. You know, you can be accused of whatever they want to accuse you of, but really, ultimately, the truth comes to the top. And the best thing to do is follow the rules. And it's pretty scary to go through your phone and delete, you know, 20 years of contacts out of your phone, but you just got to do it and follow the rules. And your clients love you, and they're going to come to you. They're going to find you. And I think that, you know, yes, there's always a legal threat, but I think that if you take what Rebecca said and I said and follow that to a T, you'll be fine.
And did Jordan, before, if you don't know if you have an answer, but Trent coming from Morgan Stanley, Rebecca coming from UBS, both firms are not part of broker protocol. Did that weigh on your decision at all to kind of square whether or not it made sense to leave or not?
May, no. I mean, it was we were going to do what we wanted to do, or what was best for our business.
I quit a job at a firm and went and started a business on my own, and I was going to do that no matter what.
Great. Awesome. Jordan, how about you? Anything else on the legal
Yeah,
side?
I mean, so ours was a protocol transfer. So, we had a little bit of, I guess a little bit easier path with that. But at the same time, I still echo what Trent and Rebecca said in terms of just follow the rules, right? Like do what, do what you're supposed to do. If you read enough of these articles out there about people that do get into legal issues, odds are they've probably done some things that they probably regret doing. And we didn't do any of those things to kind of raise the red flag. And I think that if you can avoid doing things that are going to draw attention to you, and make sure that you're following the rules that are in place, I think you'll be fine. And I totally agree with and echo with what Trent said about legal counsel, having good guidance on the front end from a consultant or whoever you're working with, I think is all very, very helpful.
Appreciate the perspective, guys. Yeah, these questions are coming in fast and furious. So I kind of like this. We're not going to follow any sort of like structure or rigor here. I'll just ask the ones that I'm seeing. Someone asked, do you feel like staying at a wirehouse makes sense for some advisors or teams? And why? Whoever wants to raise their hand to go first, take it away.
Lewis, for us, I think you owe it to your clients to investigate what is available outside of the wirehouse. And once you see it and once you realize all the things that you could be doing for clients without those limitations, it becomes an easy decision. And from that point, you just do whatever it takes to get to the other side and have your own firm and be able to serve your clients better.
Well said.
And there's so many
Yeah.
options. Like you don't have to, there's partnered independence. There's all these different models. So if you feel like, yeah, I want to do this, but I don't want to do X, Y, and Z. Well, there's some model out there that'll work for you. Or if you want to do it all on your own, it's out there too. Or if you want to take stepping stones to get to one way or another, that's out there. So I totally agree with Jerry. We all need to look at what's out there, right? That's what we're doing to better our clients. But I think there's so much out there that it is a little intimidating. But once you start looking, you're like, whoa, there's a lot available.
Yeah, I think that that was the point you made was exactly where my mind went to, which was that I think that the initial thought that people have is, doing what we did, which is go out, build a business, like, kind of do the whole thing. But that's not the only option that's out there. You can go partner with a firm that already exists. You can go, there's multiple, there's routes where, I know through LPL that like the Linsco route, you can go independent. You're still independent. You own your book, but they do everything for you. And there's all these different sort of models that are out there. And I do think you're kind of doing yourself and your clients a disservice to not at least look and to educate yourself. And I mean, I can speak from experience. We were head down just doing work for, the whole time we were at Wells until we kind of reached a point where we were like, this isn't working anymore. And now we need to educate ourselves. And I kind of wish we had educated ourselves a little further along the way because, we might have made a change earlier. And so, I think that it's good to know what's out there. It's good to know how the industry is evolving and the different models. And then you can think about what might fit best for you.
Definitely. This is a good question. What's the biggest enhancement to client service in your new business that you couldn't do at your prior firm? Who wants to take it?
I think you, again, putting the resources in place that fit your clients. For example, if you've got a client that has a bunch of alternative investments and you need to track those and calculate the returns on those and whatever that may be, most likely you don't have that option because those are held outside of a wirehouse. So if that's important, you get a technology in place that can do that.
Good one. Anyone else?
Yeah, I mean, I don't really know where to start. I mean, better financial planning tool, better contact management, better, we actually have tax planning software, which we didn't have and weren't allowed to have before. There's all kinds of different tools. And then additionally, like I've talked about, being able to build out an actual full service team that can really wrap the client up and deliver the type of client experience that we want to deliver is something that we weren't able to do. So for all those reasons on the client service side, it's so much better.
And a question came in, Jordan, about what tech stack you're using for investment management and allocation. So I guess that can be a question for all of you. But since you mentioned some of the technology tools, I thought I'd ask it.
Sure. I'll start. We partner with Helios. So they're a quantitative research partner. They help us to build all of our models and kind of all of that stuff. And then we use Black Diamond for performance reporting and Client Vault and all that kind of stuff.
Excellent. All right. Any Trent or Jerry? I know it's a great question. Lots to talk about. The prior one about how you can service clients better at your new firm.
I think, the difference is, as an employee, you're kind of think about sports from a sports perspective, you're kind of a captive agent. You're stuck with, sort of a, single sports team that you play for, where if you're on your own, you're a free agent and you have the ability to kind of go anywhere. So at the firms, you can't sell away from the firm. So is your firm the only place that does banking? Well, now you can say, all right, here are 5 banks that we can go look at. And it allows you the ability to actually go out and shop not just what your firm has to offer, but what other people have to offer, and help your clients from maybe a credit perspective. And maybe they're looking to create a family, private equity fund that they want to run like this individual fund. You're not going to be able to do that at some of these larger firms, but you have the ability to go out and help them set up their own feeder fund for their family office. So there's a lot of things that you have access to that you can't really bring up because it's not really a regulatory issue there, but it's a rules issue. They don't want you sending business away from the firm. And sometimes that's the best thing you can do for your clients is find another option for them somewhere else and help them, solve a solution they're looking for. That is, the real crux of what it means to be independent and truly on the same side of the table as your client.
Yeah, it's just nice, Lewis, to be able to do everything. And if we are not currently doing something, being able to go out into the marketplace to find an expert or some piece of technology that's going to help us do it better. Like Jordan said, we have tax planning software that we didn't have before. We work a lot with our clients on estate and trust planning and have an avenue where they can do that work through us or through a third party that we never would have had at Merrill. And just the ability to do all of these other extra things that clients need, but you can't do while you're captive.
Yeah. And I'll give Jerry a nod. I mean, I follow him on LinkedIn, and he's putting out just amazing, like, short, digestible videos. And some of the concepts are like so simple. It makes me, as a non-financial advisor, just really understand concepts. So I'm sure there's a multi-pronged reason why your firm does that, but I would imagine it's a big benefit to clients being able to react in real time and to share concepts and educate them. So maybe if you want to just share a little bit about your social media or your video approach.
Absolutely. Soon after we launched, we really just wanted the opportunity to be able to talk with all of our clients at least once or twice a week. And it's very difficult to do that over the phone or over Zoom. But with video, we can prepare a video on a current event or a market topic or anything that we think is important for them to know, email it out, post it on LinkedIn, YouTube, Instagram, Facebook, and have not just our clients see it, but hundreds of thousands of people who are prospective clients or centers of influence or connected to our clients in some way. And for us, it has just been huge.
Thanks for sharing, Jerry. All right, next question I got. Can you talk about compliance? So how is compliance different in the environment that you're currently in versus your old firm? Let's start with Jordan.
It's a lot more of a partnership and a lot less of a gotcha. And I think that everything, here we have a dedicated compliance person that we talk to when, on a regular basis. I truly believe, now every compliance person says this, but I truly believe he's there to protect our business and to be an advocate for us. And I didn't ever feel like that, before. I felt like it was very much a, you know, we're, sort of big brothers monitoring us, and they're waiting for us to slip up and do something that they can hammer, and that's not at all how I feel now.
Yeah, and I think with Jordan being on the LPL platform, I think some would think or say that you're restricted because you're captive to a platform. It sounds like that's not the case, that
I
they're doing
I have
compliance,
not
but
felt
that
that.
it's more of
Yeah.
a partnership.
No, we haven't felt that. It's felt a lot more like, we, at least for what we want to do with our business and with our clients, we have not run into anything where I've felt restricted or not been able to do what we wanted to.
Mm. Rebecca, Jerry, and Trent, I know each of you now run your own RIAs, so it's probably a little bit different of a dynamic. So I guess same question, but also, isn't compliance like a lot of work? And like, how do you reconcile taking the risk as independent business owners?
I was listening to Jerry speak about videos. I use True Independence. They kind of do our back office and our compliance. And basically at the firms, they're trying to protect their brand. At our firms, we're trying to enhance our brands. So they're truly a partner to us. I can get something, or I can write a script right now, 10 minutes, send it to compliance, and probably in an hour start shooting a video and have it approved. Where I just don't think that the large firms really want that individual voice out there. They try, but it's a lot different for them because, how many thousands of advisors would they have the time to approve that for? Where we're in a much more intimate environment. We're on the same side of we want to get things done right. And, our compliance is truly, like Jordan said, they truly are our partner.
How about Jerry and Rebecca?
Yeah, for us, Lewis, we have a dedicated compliance person who is amazing at Dynasty. And maybe like Trent and Rebecca, we were fortunate enough to be audited by the SEC in our first year,
Yeah.
which actually was quite good because it was a nice check on everything that we were doing and just ensuring, especially in the first year of our business, that we were doing everything correctly, that our compliance contact was giving us the right advice. And it actually gave us a lot of confidence for the 2 years after that since our audit.
Hmm. Rebecca, how about you? A
Yeah.
differing answer?
I think that is one thing I did not necessarily know when we jumped off, is you will be audited your first year. So just that's a side note there. But yeah, I mean, I think that so we use a third party. We do not have compliance in-house. We hired a partner for it, which is again just another part of our quote unquote tech stack. But they want to help us get things done. They're, like Jordan said, they're not there to stop you. They're there to tell you how to get it done. I mean, I was at UBS. I'm a CPA, hold the license. Couldn't put it on anything. Couldn't say I was, couldn't. And I always ask,
Same.
well, we don't give tax advice. I'm like, what do you mean we don't give tax advice? We don't give tax advice. Like, okay, well, we do, so they're just there to make sure, like everybody said, that you're not doing something wrong. They're not there to catch you, and you don't feel like that. You feel like even when they come back and say, hey, you may need to disclose this, or you may need to footnote this, or whatever, it makes sense. It's not something crazy that no one can explain, and it's just a rule because it's a rule.
Yeah. Yeah, I love it. I mean, I think all of you are agreeing, but you each experience the benefits in a different way. Next question we got is, how did you go about building new predictable client acquisition channels as an independent? I think the background of the question is likely some wirehouses or all wirehouses, there's a perceived ability to get referrals from a bank or from partnering with other advisors, et cetera. How, I guess, one, did you all receive referrals while you were at your prior firm? And what have you done to attract new clients since going independent? Let's do Trent first.
I mean, I've had a really good referral network. I think probably all of us get most of our referrals from our current clients. I mean, that's the best referral, and that doesn't stop. And there are attorneys and CPAs that send you referrals. I got more business that way than I did from my old firm. Um, wearing the hat with my old firm's name on it never brought somebody through the door. So, the the referral network and the growth of my business really didn't change. It just, we had our own firm name, and the referrals keep coming, and the business is growing organically at probably a little faster clip than it was when I was at my old firm.
So basically run the same play.
Yeah.
I think clients are more likely, or we have found clients are more likely to refer when you are your own business. Like, our clients were so excited for us. They were thrilled that we were now going to own our own business. And I can think of 2 of our larger clients now that were new about us, and like maybe we're part of a family, but not our clients yet, that like loved our model, and just so that the being out of the bigger firm was actually a benefit to them.
Yeah, especially if you work with business owner clients, you're eating your own home cooking and have the empathy and relatability to what they're going through. How about Jerry?
Yeah, I agree with Rebecca that once we had our own firm with our own name and they could tell how proud we were of it and that we had created something just for them, we easily get 5 times the number of referrals that we got at Merrill. It's not even close. It's way more, and clients are way more excited about talking about the experience that we've given to them than a big firm or a brand name.
5 times as many referrals. That's amazing. Is it because you're out there more on social media and the like, or is it more so just the experience you're delivering to clients is different enough where they're more incentivized or more apt to refer than they were?
I think a big part of it is the experience, but they can also tell how excited we are, and then consequently our clients are excited about it. And people want to join something like this. It's hard to have your own personal brand at a big firm, but once you have your own firm, you can do whatever you want and make your brand really, really strong, and that immediately leads to a lot more referrals.
Great.
Yeah,
Jordan?
I mean, so a little bit different perspective in the sense that we came from a bank channel model where we were getting a lot of referrals from the private bank. And that was definitely one of the things that was a little bit of a concern for us, is like, where, this question, like, where is this going to come from? And I could not agree with Jerry more. I mean, easily 5 times, maybe 10 times, like the number of referrals come into us now from what we were getting from within the bank before. And I think that's just a testament to all the things. I mean, I think it's all the different things. I think it's a great client experience driving better, client engagement and more introductions. I think it's more social media and all the stuff that we do with our branding and sponsoring events and things like that, and being able to kind of get our name out there now after, almost 3 years has built kind of some brand equity, and we're starting to get, introductions that way. I think it's COIs starting to, I think they feel a little bit more comfortable referring to another business owner than they do to this big monolithic, organization. I think it's just kind of like, I think there's a camaraderie there a little bit with CPAs and attorneys and people like that. I think that there's, we have so many clients that have told us like, hey, we're so proud of you guys, kind of like Rebecca said, like we're kind of like they're on Team Carnegie, right? Like they're with us, and they're out there looking for more people. And so I definitely feel that all the time.
Yeah, thanks. I appreciate that perspective, Jordan. I got actually 3 questions related to kind of the portability and some like the strategy behind leaving. Was there anything that you all did, obviously within legal bounds, before you transitioned, that you would recommend that helped you increase portability or helped make the move a little bit easier in hindsight?
I think like everyone else said, it does take a lot of time. So the biggest thing I did, we have 2 young children. I told my wife and kids that I probably wouldn't see them for 2 to 3 months. And that's exactly what we all did is we put our heads down, worked 12 hours a day, 7 days a week, so that our clients could be with us and be having a great experience as soon as possible. For us, we had 95% plus of assets at Persilium within 6 weeks of leaving Merrill. So we were successful in making that transition really quickly. And the only thing we did to prepare was just walk through that checklist, make sure that on day one, clients were going to have a great experience with us. And we felt fully prepared when we left.
Thanks, Jerry.
Yeah, I think it's like, there's only so many things you can do. There's certain things you can't do. Obviously, you can't, do a lot of prep on the client side and all that. But I think I think it's doing all the things that you can do and all the things you can think about really, really well and be really well thought out with your branding and your marketing approach and your communications plan and, like all those types of things, I think are really important so that, that once you hit the ground and then, then you have all the client stuff to sort of, occupy your time. All that other stuff is humming and it's doing what it's supposed to be doing.
Excellent. This is an important question. I'm surprised we didn't get it sooner. But what was your approximate portability percentage? And how did you plan for low or zero initial annual revenue to get you over the first couple of months and kind of just projecting for maybe the first couple of years?
Okay, I'll take it. I think that we were at 100% of what we wanted within 60 days. We tried to leave some things behind. They still found us, some of them. So you try to clean up your book when you're in the middle of a move. That is a fact. I think there were like 2 people overall, 2 relationships. There are various reasons. One moved and the other one had a death in the family. Those kind of things will happen in the middle of your move. It really comes down to your service model. If I go back to the last question, like if you have a service model where, we use Supernova from the old days, it's still around. Actually, they've been rekindled with a new owner where, you're monthly getting on the phone with your clients and having a conversation monthly. And the next month, that second Tuesday of the month rolls around and that phone call doesn't come. They're like, well, where are they? So I think that you can prep through your service model and that helps bring people over. I think that, once people get used to your service model and you and your team, not having your team there, it's kind of uncomfortable for people and they really want to move very, very quickly.
Right.
I would agree with Trent. You do. I mean, this is a great time to clean up your book. You don't necessarily. Maybe everybody isn't a perfect fit, and so I would say we were very similar. Moved over everyone we wanted to, but people that the percentage comes from your relationship, right? Like we heard time and time again, we don't work with UBS. We work with Rebecca or Matthew or Adam or whoever, or now Marble. And I think that was number one, really rewarding to hear. We're there for y'all, just like we are there for our clients. Our clients are there because of us. So retention, although that is the scariest thing that you'll probably have going through your mind every day, I think all 4 of us would agree that it at the end and after it's over, it was actually maybe the scariest, but the most rewarding as well.
Definitely.
I would say, so we're all numbers people, right? So I would say run numbers. Numbers give me confidence. So I was able to say, hey, look, if we only bring 70%, we're fine, right? Or 65, I think was closer to the number that I came up with. And it was like 85, and it's like, okay, well, and now it's like 150, right? It's because, time has gone on and it's grown and it's done everything we hoped it would do. And so it's kind of like, don't get so fixated on the worst case scenario. Just know that you'll define what that is and know that you'll probably be okay, even if it's that. And it's very likely to be much better than that. And just kind of focus on on the positives and you know, all the things that will come out of the transition and the growth of your future business and all that would be my advice.
I like that. Jerry, how about you?
Yeah, I think once you're on this side, you wind up talking with a lot of other RIA owners. And what you'll find is, like all of us, you're all nervous about it going into it, and you're unsure of exactly what it's going to look like. But every single person I've talked to was successful, had a 90% plus transition. Everyone always says they wish they had done it sooner, which is true. So it's going to be fine. It's hard to get over that hurdle, but if you're confident that you're doing the right thing for your clients and they really are going to have a better experience, you have to do it.
Yeah, well said. I like this question. How did you go about building the narrative to share with clients? And I'll take it a step further. I know for some of you it's been 3 years, others it's been about 2 years or so. You may not remember it, but what did the initial pitch sound like to clients? Or in the case of Trent or Rebecca, your non-solicitation, when clients asked you directly about why they should come with you, what was the talking points and how'd you go about building that out? Jerry, you want to go first?
Sure. We definitely thought a lot about it. And we told them the truth that we wanted to give you an even better experience. We are very excited about this and built this firm specifically for our clients, including you. And we'd love for you to join us. And that really resonated with them, and they all did. For us, logistically, we had our website ready, of course, and we also did a video and an email that we sent right after our resignation because we wanted clients to hear from us first, if possible, before hearing from Merrill and hearing why we did this. And it worked really well.
I like that. So meaning you pre-recorded a video that would be distributed to your clients.
Correct.
Very cool. Very cool.
We did that. We did that as well. I totally agree. That's a great thing because they get to hear the story before, because you can't make, 100 phone calls in 10 minutes. So you want to get, you want to get the narrative out there first. And I think the video helped a lot with that for us.
Trent, Rebecca, anything later on?
Well, we were non-protocol. It's a little bit different. You couldn't send those kind of things out. You had to really wait for clients to come. What happens, when I left is all of a sudden we had so many incoming calls, me and my two partners. It was almost like, oh my gosh, how are we going to call them back? So that was nice to have the amount of incoming calls coming in, but we're non-protocol, so we could not solicit. So, the worst thing that would happen, about 2 weeks in, when I finally could make outgoing calls to clients that I had not contacted, I just had to say, I moved, and then let them ask me questions. And, usually I moved, led to more questions, and they would just ask me questions about the business and what we had set up. But like, you can't say things like, oh gosh, I really want to earn your business and things like that, because that's solicitation. So you have to be very careful. And, and people are like, oh, I knew I was going to track you down. What's going on? How do I move? What do I do? Really, it was much more of, it was humbling, much more incoming to us than we expected. I thought we were going to have to do a lot more work reaching out, but they heard we were gone. They were looking for us. They found us. We had a website. They found us. They looked for us, and they, like, how do we move? How fast can we move? So, I know Rebecca.
Similar experience.
Very similar. I mean, there's only so much you can say, but when you say, we left UBS, and then if you just stop, they're going to say, okay, where are you? What are you doing? What, and then, and as if they ask it, you can tell them. So, it felt like it was Groundhog Day, because you're like, same story over and over and over again. Yes. But,
what was the story? What were some of the main points you made?
Oh, about why we moved? Just, I mean, again, like we talked about, being our own business owner, being able to, select our own tools in the toolbox, just being able to provide more services for our clients, just a better business model. And it's not rocket science. It's just a better business model.
Fantastic. I got a good question here about, hold on, there's a lot of questions. Bear with me here. How do your firms go about attracting new advisors or new employees? As a smaller independent firm, you likely don't have as much financial resources or name brand cachet like you did at your prior firms. So I think each of you have dramatically increased the size of your firm since you left. What's been the strategy? How do you overcome some of these perceived obstacles? Let's go with Jordan first. I think you said your firm's now like 25 people, so you've done
Yeah.
the most hiring.
So I think that on the recruiting side, like recruiting other advisors side, LPL has been a tremendous partner for us with that, I would say, both in terms of offering transition assistance to recruits as they come over to join us. So that's been helpful because then that's not money out of our pocket, and we're benefiting, from that. And we've also got a great relationship with the recruiting team there. So as they come across people that they think would be a good fit for tucking in with us, we're on the short list for that. I think as far as other team members, it's really, that brand building. It's getting out there, getting the name out there so that people are aware of it. We've done a really good job, I think, with developing and we've got internship programs. We've had an intern every summer. Like kind of doing those things. But I think just we're on the Charlotte Best Places to Work list now, and all of those types of things. So just like all those little things, I think just put it out there that, hey, this is a company you would want to be associated with, you'd want to be a part of. And I think that combined with the power of LPL has been a really good, partnership for us.
Do you find, quick follow-up question for Jordan, do you have to pay more to attract talent now that you don't have the Wells Fargo brand behind you, or is that not really a determinant in talent wanting to come to your firm?
I have not seen that at all. I honestly, like, I think that I think that because I think that a lot of people see a small firm as a growth opportunity. I think they see it as, hey, there could be equity down the road, there could be all kinds of upside in a situation like this versus maybe a big firm like that. I think that there's actually a calculation that goes on for the right kind of person that's like actually would rather be in a smaller place where I'm closer to the decision makers.
Yep. Anyone else? And I think, again, you've all hired, so what's been your experience?
I would totally agree with Jordan. I think we're in South, and that name brand does not mean anything to employees or to clients. If anything, like Jordan said, they like the more family atmosphere. Oh, you've got, your kid's got a game. Don't miss your kid's game. Go, go to the game, whatever. I think so right now we came with 3 of us partners, 1 employee. Now we're hiring our 3rd employee, so 6 of us. But our biggest asset there are the 2 non-partners. I mean, they will sell marble better than anybody. One of them came straight out of college. One of them has worked probably at 3 different places just between having kids and stuff, and they'll both sell marble to another advisor or recruit or somebody coming in, whatever the position is, better than anybody.
And Rebecca, just on the same topic of human capital, I know your partner Matthew, your partner Adam, you kind of each do different things. Like you're all running the firm together, but you're not all like wearing the same hats. Can you just talk briefly about that dynamic?
Sure. Yeah, so when we started Marble, we had 1 book that all of us worked on. Since then, one of our associates has taken on some of the roles of being an advisor for some of the other clients. But yeah, Matthew, Adam, and I work on everything together. We don't have our own clients. Like I said, I was a CPA, so I do more on the planning, the tax planning, the estate planning, running Marble itself. Adam was a portfolio manager at Retirement Systems of Alabama, so he does all of the investments, and then Matthew kind of plays back and forth in between the 2 of us. But we all sit, some people think this is crazy, but we all sit in one room. We don't have our individual offices. That is our CRM system. And I mean, we do type the notes in there, but that is how, I mean, you know, if I pick up the phone and run out and the client calls back, Matthew already knows what happened because he was sitting right there during the conversation. So
I love it. I mean, it's the culture that you decided to create. So
Yeah.
everyone does it differently. Thanks for sharing that, Rebecca. How about Jerry or Trent, the hiring question?
Yeah, we have been very selective and we have chosen to pay more than market for what we think are exceptional people. The way we've done that is through recruiters, including yourself, Lewis. So thank you for your help. But just identifying people local to the Philadelphia area because our office is all in person every day. So we're all in the same office together. And we think that we have a great culture that's really fun and we want to be a place to, the people want to come to work. And we've been very successful in attracting really top talented people.
Can you talk about your sabbaticals too? I'll always remember that because I'm so jealous that you've put that into place.
Yeah, we decided for every employee at Priscillium, there's a mandatory 2-week sabbatical every year where they're not allowed to have their laptop, their phone, or any contact with the team or clients. And we did that for 2 reasons. We wanted people to be able to recharge, be with their family, have an adventure outside of work, and be totally disconnected. And we also did that at Priscillium because we wanted to see if anything would break while they weren't there. Is there some system or process we should put in place that only this person knows? Because we want to make sure that if any one of us is not available for a client, that someone else can immediately step in. And it's been really successful on both fronts.
Fantastic. Trent,
Yeah.
hiring question.
Well, we have 2 interns every year, sometimes 3, so that kind of helps feed the future. And I have a lot of faith in the next generation. Despite the complaints I hear, there's a lot of tremendous talent out there. And do we pay more? I try to pay more than the market because I want people to stay, and I try to create wealth for these people. So I'm not just trying to hire an employee. I want somebody that becomes a true partner in the future, just like a law firm. I'm hiring associates. I want to turn them into partners. I want to make them wealthy. I want them to, we're trying to create a multi-generational business. So we're trying to have all generations in our business. So we are definitely investing in people's future and spending the money it takes to get really high ethical, morally driven individuals.
Fantastic. We got legitimately 15 more questions that have came in. Unfortunately, we're just about out of time, and I had a lot of questions I didn't even get a chance to ask. So what we'll do is we'll distribute the questions to the panelists. It's up to them if they have time or they want to answer the questions, but we'll attempt to share their answers with the folks who asked the questions. And just to quickly wrap and take us home, like to me, like one of the big points that I took from this is independence isn't one size fits all. Like you heard from 4 very successful folks. I mean, they all have their own cultures. They all left different firms. They're working with different types of clients, and it's what you make of it. Like no one's gonna be there and just give you success. You have to go and take it and have the initiative and drive to do it. But for those that kind of see a better way, see a different way, I hope the wisdom from today gives folks confidence to act. The only thing I think all of you would agree that people tend to regret about going independent is not doing it sooner. So hopefully this was helpful. We're going to create this as a podcast as well. And really hope this was a great venue for you to get some questions answered in a confidential setting and arms you with some strategic ways to operate the business. So thank you to our 4 panelists and Advisor Hub for hosting us today. We really appreciate it, and we will 1000% do something like this again.
Thank you, Lewis.
Thank
you,
you.
Lewis.
Thank
Thanks.
you.